Daily highs and lows. Previous day's high or the last highs in the last 3 days. Because power three is not limited to just how one candlestick forms the open, high, low, and close. Power three is spreading out when we look at these books, buddy. It's going to be real interesting. Swing highs form and swing lows form with 3 ranges. Whatever time frame you're looking at, it requires 3 ranges. Now you can have equal highs with no wicks, and that could become a turning point. They require something else that I'm not going to teach here because it takes a little bit more time to go beyond that, and I'm going to be escaping here in about 10 minutes. But a swing high and swing low requires 3 ranges, whatever time frame you're looking at it under. If you're looking at it on a daily basis, you have to know what the last 3 days high and low have been. If you don't have that information, you're ill-equipped and not informed. Because those pools of liquidity are gold mines. They are so influential over what price is going to gravitate to. It's nuts not to know what they are. How many times have you seen me call at the beginning of the week, here's where price is going to start gravitating to? It's several hundred handles away. And the market runs up. It's right up there, falls short about 80 handles, creates a swing high, and then it plummets. And you're thinking, look at this guy, wrong. I can't wait to go on Twitter. I can't wait to go on X. This guy is such a failure, blah, blah, blah. And it just goes down to something as a discount that I'm trading in front of you, calling it in Telegram, and then I'm running it up into that target. I love those setups. They place that swing high there just below a target that I know is a draw on liquidity, which is an old daily high, which is a previous week's high. No, that's not earth-shattering. No, I didn't invent that. I didn't say I did. But all you yahoos out there that want to talk smack all the time, you literally don't do it because you're looking at something else. And you're posting, here's my $700 win. Here's my $500 win. What are you doing, ICT? An annual salary. Just saying. Just saying. Swing highs that form just below or just above draws on liquidity that I've shared openly with you. Look at what I've been teaching you. Look at the ones I've shown you. Why have I brought them to your attention? They're fitting the criteria I'm outlining here. Previous week's highs and lows. That liquidity is enormous. It's enormous. They're all time-based setups. They're never going to hide the daily high from you that was yesterday. They're never going to be able to do that. They're never going to be able to do that. But in Forex, they can. Compare all the major brokers for Forex. Look at GBP USD. They're never going to agree. They're never going to have the same high. They're never going to have the same low. That market, especially right now, has so many disadvantages versus the futures market. The futures market, everybody has the same high. Everybody has the same low. So that means every bit of liquidity that's going to be above the high is concentrated at that high's price and just above it. You cannot have that same affinity in Forex because there's a disparity. And when you look inside how those brokers operate, they have smaller little pools where they're trading against their clients. I could show you that because I had brokerage accounts through GFT, which I don't even think they exist anymore. They shut me down when I mistakenly talked out loud when I was on the phone. I said, I was letting my son trade one of the accounts. And they're like, what did you say? I was like, yeah, I was letting my son, he was, I'm trying to teach him how to trade. And he goes, well, you're not supposed to do that. And I was like, well, just pretend you didn't hear it. And he finished the conversation with me. And immediately they sent me notice that, they closed the account. Okay. But I found out because I had multiple accounts in that brokerage firm, those highs didn't agree. Just like FXCM. Remember them trash brokers? Remember that trash broker FXCM? Same thing there. Multiple accounts, friends that were trading too. Their highs are different from mine. I'm like, what in the world? Wow, that's way different from what I got. You don't have that problem when you're trading futures. NASDAQ's high is NASDAQ's high. But having that pool of liquidity, it's time-based. It's time-based. You're never going to be able to hide it from you, ever. They're never going to be able to hide it from you. New week opening gaps. You've all fallen in love with them, haven't you? They're like magnets, like black poles. No light escapes them. They suck in everything. Beautiful, isn't it? Isn't it beautiful? You can see how they just go back and forth, gravitating to this one, to that one. There's so many setups intraday that you can take with that. And you don't even need a bias. You don't even need a bias. If it's in close proximity to a new week opening gap high or low, and it creates a fair value gap that's bearish and the new week opening gap's lower by 20 handles or a little bit more than that, you have an easy bread and butter setup right there. Oh man, it's easy. That's easy. At the end of this year, I'm going to give you a challenge going into next year. Don't do it now. Next year. I want you to try to go into the day with a demo account and always be in the market. You got one contract, micro contract, and I want you to constantly stay in the market for a set period of time, the entirety of the AM session, or the entirety of the PM session, or the London session. Or if you're really gung-ho about it, the entire session. A lot of people don't have the stamina for that. But I've done things like that. I've conditioned myself to do that. Constantly, I got to be in a trade. If I close, it's only because I'm reversing. You want to learn how to really get a feel for price action? Practice like that. And you will be a maestro in market structure. And you will run circles around anybody else out there that has a title that they work at this firm or this, I'm a Goldman, I'm a this, you're a goober, okay? You can't do anything. Because if you could do it, you'd be out here moonwalking in front of everybody doing it, but you ain't. You're laying on your title. Who cares about that? You're trading other people's money. You don't even suffer the real losses when you have a loss. So what's that really telling you? New day opening gaps. The opening range gap. They're all time-based mechanisms. These things cannot hide from you. And when you strip it down and say, okay, I'm going to look for the setup that runs into a new week opening gap. I'm going to forget everything else that ICC ever said. I can see this happening every day. When your weak analysis, W-E-E-K, not W-E-A-K, your weekly analysis suggests that we're going downtown for a while, a couple hundred handles. And you see intraday, after a rally in the morning, up, and it's starting to break down, starts to roll over a little bit. Now you see that we're just hovering above a new week opening gap, whether it be this week's new week opening gap or last week's new week opening gap or anyone in the last 5. That is a no-brainer trade. They're going to be such an easy ride. Low resistance liquidity run, right down to the new week opening gap high. That's it. Don't try to get in there and get fancy with the constant encouragement of it. Don't try to get the whole new week opening gap. Same thing with the new day opening gap. If you use these as little magnets, you're tossing your coins in the direction of that magnet when you put a trade on. Sure, not every one of those coins are going to be magnetized and gravitate right to it. You might miss a little bit of the move. Even if you get close to it, it's just like in horseshoes. If you get out in the direction of that new week opening gap or new day opening gap from where you entered, if there's a difference that allows you to make your ends meet, your car payment, your car insurance, pay for your groceries for that month, you know what you're doing? You're eating. And in this world right now, that's the number one priority right now. You're not about getting rich. That can happen over time. But you got to learn how to eat by your own hand. Not the person you're getting a paycheck from each week or bi-weekly. You got to learn how to do this on your own.